Welcome to another special episode of our Capital Ideas podcast, The Power of Advice. These are conversations with business leaders, how they built brands, reinvented careers, and led and developed others. And today we have Hock Tan with us, the CEO of Broadcom. We'll explore how an education-first leap from Malaysia shaped his relentless focus, disciplined deal-making, in view of scaling innovation in AI beyond the hype. Hock, welcome to The Power of Advice. So you were born in Malaysia and you had a couple different paths you could choose. You could stay there, and I think from what I understand, you had a path to be a doctor, or you could go to MIT where you earned a scholarship. So you end up coming to the US, you start building your education and your career, and you're super disciplined. Even today, you arrived early for our podcast. Not everybody does. You arrived early, you're disciplined, you're focused. So you must have realized somewhere in that early journey that focus itself is a competitive advantage. Can you talk a little bit about focus?
You call it discipline, I call it intensely, maybe obsessively focus. But it passes through also in terms of leadership styles, in terms of the way I approach first my life and business, particularly business. Take, for instance, Broadcom. I became CEO just about 20 years ago, almost, and we are very intensely focused on driving that business for 20 years and doing pretty much the same thing. You got to learn something and get pretty good at it.
Let's get into Broadcom. Began as a semiconductor company, but you also built it into a software company. So what caused you to make that move? Again, you said you've been at the helm for 20 years. Why'd you make that pivot?
Well, I really entered semiconductor, the industry, late in my career, really late. And what I recognized quickly was technology, and semiconductor is a big part of technology. It's a very huge profit pool. And I hate to say, not very well tapped.
Right.
Historically. It's interesting. So I plunged into semiconductors, Broadcom went in, and we went on basically a strategy of focusing on key areas of semiconductor technology. And we quickly decided early on that the industry has matured then to the point where it's probably smarter to buy than to build.
Right.
So we went on a bunch of acquisitions and built up the company to the point where 20 years ago, there were maybe 7 product divisions, product areas in semiconductors. And today we are probably about 17 product divisions semiconductors. And so after we'd gone through this spate of acquisitions, we realized too quickly that hardware and software to that extent can be interchangeable.
Right.
So we went on the same mindset in acquiring certain software assets.
Buy rather than build.
Buy rather than build.
So you have to have, for that kind of acquisition strategy, you have to have a pretty keen eye for trying to identify companies with potential. How does that happen? Tell folks who might not understand how you build through acquisition, how you find the right companies.
Well, I have always articulated that to my public shareholders too, and of course my board before. And your portfolio managers recognize that very well. It's basically nothing unusual. You know, when a business is starting to mature, but still, especially in technology, you really look for 3 characteristics in any asset that you're buying. One is that they're sustainable. First and foremost, that in its current form and future form, which may be next 5-10 years, that there's a good market for it, sustainable. It may not remain the way it is, which is part of technology. It's always evolving, but it will be there. So the key is sustainability. The best way to look at sustainability is not to try to forecast, which you can try, is to look backwards. If the thing has been around for the last 10, 20 years.
How is it done? See what's happened.
Yeah. Second thing, the second requirement is that the asset we're buying is the leader in technology. That's why you have to do some due diligence. There's the leader in technology and where they are. And the third thing, ideally the leader in market share then. Because one thing in technology too, incumbency means a hell of a lot.
Right.
So if you meet those three characteristics, we acquire that asset.
And that strategy is worked out when you integrate companies and trying to create this one Broadcom. How does integration work? What's your integration playbook when you acquire?
Nothing unusual. I mean, frankly, and it passes through the way we run this company too. The decision to acquire, especially large acquisition that transforms the size and position of a current company, is material. So who should be the chief integration officer? Me. There's only one person. That's
You
the
do
CEO. The CEO should do that. Whether it's me or whoever is my position, there's no other person to do that.
So you have to own the integration. You have to make sure yourself that it works.
Well, I own the acquisition. I own the decision to acquire. I should own that various steps needed to integrate. You never want to leave it to hire a bunch of consultants, form committees, best practices. All that is pure BS.
I like that. We're going to keep that. Please don't edit that out. One thing you do, which is really hard, is you're mindful of expenses, and at the same time, you have really good R&D and you drive innovation. And everyone tries that, but it's very hard to succeed in it. Expense control, innovate, both. How do you do both at the same time?
It's really very simple when you think through the holistic picture. You pick the particular product line, the technology or market vertical, where you are already in the lead, where you have scale in that particular market, and you have a technology lead. Just keep reinvesting and making sure that you invest enough, or even more than enough in many cases, to sustain the lead. Most of these markets in semiconductors, there's already somebody else in the lead doing it. So you go in there to try to compete, you waste resources, and after a few years, you get your ass kicked.
So just avoid distractions.
Avoid markets where you know you are not the incumbent.
You know, it's interesting you say that. I had a breakfast with Henry Kravis and George Roberts, two of the founders of KKR, and I was asking them for advice. And they said, when you're dominant in a business, continue to dig a deeper moat around that business. Continue to get even more dominant in it. But that's exactly what you're saying. Don't compete somewhere where you can't be a leader. And when you have a lead, have an even greater lead.
I know George very well. He's a very, very clever guy.
Yeah. So it sounds like good advice for all of us. Let's pivot to leadership now. You have 25 different businesses, distinct businesses. And as you say, these are highly technical leaders. These are subject matter experts in their different spaces. How do you lead 25 different folks and let them be autonomous, but still own the outcome as the CEO?
Actually, it's easier than you think, because you're right. When we pick the business leader, we call them general manager of each of this product division. We try to narrow it down to just one single product, because if it's only one product, they have to focus on it intensely. They invest in it, and if it fails, they're done. This is called the portfolio syndrome. Sounds familiar to you too. If you're a general manager and own 2 or 3 products, one can do very well and you can afford the other 2 to just be mediocre and get away with it. And that's how mediocrity comes into place. If you put one person, one product fully accountable, believe me, they figure out a way to make it the best.
That's what they're doing. That's what they're focused on.
That's all they do. And all my job is to make sure they're focused. So I go and do reviews every couple months. And
with every leader.
And their team listen to their song and for 3 hours, 4 hours. That's all I need. And just like go to a concert, a classical concert, and watch for the off chord. Something doesn't sound right, you wake up.
Right.
That's it. Otherwise, leave them be. They know what to do.
And do you bring all of them together at times, or do you keep them just focused on their area and you spend time with them in these regular business reviews? Or do you take the 25 of them and bring them together as a group?
No, because the answer is, why do you need 25 people? Very hard to deal with them. And what do you get out of it? They all have very different interests.
Stay in your lane.
Stay in your lane. That's a real game.
When you look at leaders, are there red flags that you see that you say after a period of time, this kind of characteristic with this leader is going to limit them? What takes a leader off track or makes them less successful?
Don't know. We don't see too many of it. It's very interesting. Now, as I said, most of the 25 divisions we acquired. In fact, 18 of them were acquired and built up. And when we acquire a particular product division through acquisition of maybe a larger company, to extract that asset out from the morass of what we acquired typically.
Right. Yeah, you're freeing it.
Liberating it.
Yes, yeah.
You need a leader. It's almost like regime change. You need a leader. But in many cases here, we don't. We don't do that very often. We look at who is already running that product division, and usually maybe 1 or 2 levels below the CEO of the public company we usually acquire. What we look for in that person is that person has to be grounded, commonsensical, and been round the block with the business.
So you have a high success rate when you have that type of person from the onset.
I like to believe we have.
Let's pivot to AI. Obviously, everyone's talking about AI, and in this world where everyone's thinking AI first, how do you figure out what's real versus what's sort of hyper a narrative? Because there's just so much noise in the system right now.
We're all learning. I haven't figured it out yet, totally. A year ago, I knew so much less and so much, information that today I dismiss as nonsense. And a year from now, what I think I know today might yet be proven wrong. So we are, the whole world, in generative AI, even the talking heads out on TV who says a lot about it, we are all running a full-scale experiment, all of us, in broad daylight, spending hundreds of billions of dollars a year. That's all we're doing. It's kind of fascinating.
And where do you think the bottlenecks will be? When you look at AI infrastructure in the next few years, where are the bottlenecks?
The biggest bottleneck among the players I deal with, see, keep in mind, we sell our products. We engage with a very limited number of customers. And these are the players who create LLMs, large language models, which they try to evolve to be better and better every generation. And there are only about less than 10 in the world.
Right.
And the one we engage with, maybe just 6. That's it. But I think at the end of the day, the owners of these LLMs will be the winners in this race eventually. And when we focus on that market, what we're really looking at is what do they need in creating these LLMs. What we find out is it's not enough to just create a very good model, a multi-trillion parameter model, which is what you need to get state-of-the-art or beyond today. There's a lot of money, a lot of smarts in training.
Right.
While you train, what do you do with it? You got to create a platform. You got to productize. And then you realize you got to spend even more money to create compute capacity to allow productization, which is another term for inference. Now, every time you build up capacity, it takes time. So what do? You take your compute capacity that you've used the last 12 months to build your model to now pivot it over to inference. Well, they may not be the right kind of compute engine, but it's okay, good enough. But while you're doing it, you start getting stupid. You don't train your model. And somebody else, meanwhile, is spending money on training. So they quickly now come to the realization, we see it full-blown glory today, that when you want to engage in these LLMs, you must be prepared, almost a leap of faith to say, I'm going to get to the best model, and I better invest now in inference, productization while I'm training.
So that's why you end up with just a handful that can afford that kind of investment. That's why they'll have a moat around their business, because the cost to enter is too high. The barrier for entry is too high for others.
That's one aspect. The other thing I'm observing is a lot of these model LLM makers, not all, but most of them, can't believe how useful those models are, even though they develop it and see its quality and its performance. So they underestimate what they need. And when they productize and see demand outstripping the ability to supply, they say, oh,
I got to
let
invest.
me,
I got to invest again.
more quickly.
I got to invest again.
So today we are in a stage where funnily enough, we're seeing huge amount of compute capacity demand and insufficient lead time ability to supply. And it's not given enough time, you can supply power, whether it's power, chips, anything else.
But you need some time.
You need a lead time.
Let's switch to advice, because this is the power of advice. And we remind folks all the time at Capital Group, use a financial advisor. Don't DIY your investments. You worked really hard to generate that kind of wealth. Now let someone help you manage it. So we talk about the power of advice. What's your advice for young folks starting off in their careers? And I'm sure people ask you all the time, but what kind of advice do you give someone who's 25 and just getting going in the business world?
Not too many people ask me.
Oh, good.
I know.
I feel good. I'm the first one.
I'm having difficulty in responding because of that. Like, what?
Advice, but
I've never heard of that.
But everyone says my kid's just finishing this. They're looking for a job in the world. What should I tell them? Not necessarily the specific job, but how to think of building a career, how to think of building their own skill set.
I think easy for someone like you and I to say, which is, figure out what you like to do and what you're good at doing, and just do it and focus on doing it. Don't look at what trends are. Don't look at what markets are. Try not to even look at what's paying the best. Just do what you know you can do very, very well, and tap into your own potential, as opposed to trying to set expectations that are perhaps too high or misguided.
I think that's excellent advice. I think there are people who feel they're supposed to do something or go in a different track, like you early on, maybe
Right.
had been a doctor.
I know, that's why I say
And your lived experience, hopefully people listen to that advice, because I think they'll be more successful and a lot happier if we're able to do that. I want to get to a personal side here, not too personal. I'm going to start easy.
oh, I see.
I'm going to start easy. What do you like to do in your downtime?
I like to watch movies and I like to read books.
What kind of genre in both? Do you have a favorite movie or series of movies, or?
What you would call trash, junk. What people would call junk or trash. I love to watch, for instance, John Wick.
Yeah.
I bet you a lot of people do too, but I do. I love that. I love to watch great monster movies.
Just to take your mind off everything else and just enjoy the entertainment.
Oh, totally. Totally.
I'm the same way.
Totally decompartmentalized.
I'm the same way. I'm probably 90% fiction when I read and 10% nonfiction, because I sort of escape into the book or the movie as opposed to...
It's true. Same here. Totally.
It's nice to do. I always end the podcast that I do with our own portfolio managers. I end it with something that I call sort of a moment of gratitude, or how they're obsessively grateful about something. So I will give you this mug.
Thank you.
There you go. See, you can keep it on your desk. The Power of Advice mug. But what are you grateful for, Hock? You know, all of us have things that we're grateful for. Some personal, some professional. What's your gratitude moment?
I'm actually very grateful for a very, very stable and fulfilling life when I was growing up in Malaysia. That really was a strong foundation, because then I had family, my extended family, and that was a great time and gave me a good foundation to make that leap 10,000 miles to Boston.
That's great. I appreciate that. I'm going to ask you to sign our Power of Advice book.
Of course, thank you. Happy to do it. Learning and longevity matters.
Keep learning and try to do it forever.
And more than that, and keep doing what you're doing.
Stick around.
And stick around. It's true. I think the biggest problem with most CEOs is they come in the middle and they're out in 5 years.
Yeah.
You cannot make an impact.
Well, by the time you retire from Broadcom, you would have been CEO for probably just about 25 years. It's a good lesson on longevity because Broadcom's done exceptionally well. So you should be super proud. Thank you. I appreciate it.
Thank you for getting me here.
Thank you all
I
for
appreciate
joining
it.
us.
Thank you.
Hock Tan at the Power of Advice. Thank you, everybody.